Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. First, want to do a giveaway here for the our Blue Line Futures hats or shirts. If you guess the number, guess the opening print for the Nasdaq tomorrow at 8:30 a.m. Central Time, you win your choice of. I got a Blue Line Futures hat here, as well as another version of our hat and a Nike Golf Polo. You can choose from that. If you can guess the opening print in the Nasdaq tomorrow at 8:30 a.m. Central Time, if your number prints in the first 5 minutes, you win. We've got Microsoft earnings after the bell today, Tesla earnings after the bell, so there's going to be a lot of volatility there. Where will it open tomorrow at 8:30 a.m. Central Time? But again, nothing to lose. Try it out. You got the link on our email that goes out. It's on our Twitter account. You can find it. If you can't find it, email us, info@bluelinefutures.com. We'll send that link your way. Let's get to it here. We've got to take a look at the heat map. First, let's start off with some of the news that we have. Overnight, the U.S. State Department kicked out the Chinese consulate in Houston. There was visuals of some documents being burned from an overhead view. Who knows what's going on there? But tensions are rising. The market doesn't care because central bank liquidity is here to save the day. There's a lot of this is going to come to a boiling point at some point, but for now, it's all about the earnings. Let's see what we get from these tech companies that have been the high flyers leading the way higher. Again, Microsoft and Tesla after the bell, but tech has been lagging going back to last week. Monday was a strong day, but it's settling in a bit here. Amazon's down. Well, let's take a look at the heat map here. You can see Amazon down about 1.5%, Facebook down in 1 1/3. Microsoft is up though, up about 1%, but very mixed. You got the banks down. Healthcare's mixed. You got across the board, some of the consumer defensive are mixed. Again, very, very mixed board across it. Energy's down here today, although crude oil has come back off the lows and holding our major 3-star support. Energy across the board is down. Obviously, a lot of excitement in energies early in the energy stocks early this week. Chevron buying Noble, but again, Exxon's leading the way lower. A lot of red in the energy sector. Let's take a look at the S&P. It is holding out above this previous June high, just very, very healthy. You can take a look. You definitely got some resistance up here at 33.30 from the gap down. But as you look closer, you can see here this line holding very well out above that previous high. Today's weakness, snapback, hit major 3-star support overnight, and that held. So again, it remains a very, very constructive path here across the board in the indices. You can see, I'll show you here, shorter term chart of the S&P, but take a look at the Nasdaq after that. What I want to show you here, this is the S&P from that previous high sell-off. Then you got that gap up on that open last week. Overall, a lot of support, a lot of volume has been trading here. If you look back at just over the last week, a lot of volume trading here. That's one of the reasons why you have support. But we have another number of technical indicators that align at this level here, 33.25, 33.30, and that's been the market's been responding from that. But if you look back out of this, you got this little bit of a widening range. It looks like we're moving up here into the close, trying to break out of that, a little bit of a microphone in a sense. Overall, though, you got Washington trying to get a deal done. Some of the news I'm seeing come across the headlines here as I got into this is that they're coming closer to deal. It's fluid. That's what the market's responding off of. But they are talking about lowering the payments to I think it's $400 a month. Again, this news is coming out right now from what would be about $1,200 or $200 a week. So there is definitely some ongoing discussions about the amount of money that individuals will receive, and that's going to be crucial. But I think right now the market is just keying off the fact that there is some positives around the conversation. I think coming into the day, there was definitely not a whole lot of progress. So let's take a look at the Nasdaq. And now the Nasdaq yesterday, you got that 11,058. 11,058.50 was July 13th, about a little over a week ago, and then we matched it but could not break out above it. Now, you look at this here, you get this big sharp move up that we had Monday, slightly lower highs, slightly lower lows, building a little bit of a bull flag pattern. So be careful. Strong earnings. You don't want to fight this market because if we get out above there, we have some technical levels in the S&P. Check it out, on the Nasdaq. Check it out on our Morning Express. All the levels are out there. What to look out overhead if it breaks out. But then we also have our support levels, and support is held. It's what it comes down to. It's been a very constructive technical path. Now let's move on to crude oil. The gap from March 6th, the front month gap now has been hit finally, because it was always the front month gap was always the one that was hit, 41.5. Now we got the actual September contract. August didn't do it. September did it now. Back within 10 cents. That's close enough for me. They have this resistance. Market responded very weakly off of that yesterday. Sold off, but $41. We've had major 3-star support there. You're seeing response there so far today. Low on the day, 41.14. The overall EIA Energy, the inventory reports, they're not as big as building headline crude as expected. Markets just consolidating. U.S.-China tensions. No one worries. Right now, no one worries. But overall, OPEC's done a good job of balancing supply and demand. And the market right now, I mean, central bank liquidity, the momentum and risk assets, the weaker dollar, all of it's keeping crude oil up. But you have a trend line here. So below, it looks like it's coming about 40.50 today. Keep an eye on this generally. And I've been saying, we want to be buyers $34. We would consider it 37. The trend is higher. So the first time down, $34 is going to be a lot of support. Now we have this here at $34. A number of technical indicators that we like, 34, 34 and a half. 37 was one in front of that, but this is where we would love to be buyers in the first test, build a little bit of position, look for a snapback, could even go to $40. Again, that would have to happen. It may not happen, but you can see here, range is tightening, it's grinding higher slowly, and that could almost lead to, you're either going to break out above it, or you're going to get a breakdown here, and $46 is the next level we have above there. So now let's take a look at gold. The metals have been ripping higher here in the past couple of days. You can see gold, very constructive move, held this April 14th high. It's building a nice base against here, and then broke out yesterday. And really started Sunday into Monday, but moved up really well. Very constructive market. I mean, you had the inverse head and shoulders here. You had the hold of this inverse head and shoulders over and over again, even better in the front month contract, the front month continuous. So overall, very constructive. Now, yeah, it's getting overbought. It's RSI is above 70, but you can see here we've seen some good peaks well above 70, actually closer to 80, at 80, above 80 in those RSIs. So there is some room here for this to push. Now, one thing we do want to point out, 1868 is our next major 3-star resistance. It was achieved this morning, today. So really what we're looking at there is a range breakout reversal. This high, the range from this high to this low, and you break that out, you got 1868. So we've achieved it. Silver, though, is the one fueling this. This is silver doing the heavy lifting here. Now, I wanted to show you, is silver overbought or not? I mean, there's some room here in the weekly. So this is a weekly chart, though. But remember, so we could see a lot of volatility. We have a momentum indicator rising, moved up above 22 here today. It's helping to build a base. But on a weekly basis, there is some room to run. We do think that $26 could achieve. Do not chase it here. There's a lot of risk in chasing silver at these levels. We could see it a lot higher, but we're using this rally to take positions off. And remember, I always say, you don't want to chase gold, but you don't want to chase silver either. You don't want to chase gold and silver, and everybody's screaming for it. That's going to be capitalizing gold and silver you already own. We've been extremely bullish gold, and for much of the time, silver too. Silver's been very lackluster, but extremely bullish gold since August of 2018. So this is finally coming to fruition here. It's really great to see. And then lastly, it's touch base on the currencies because the dollar is starting to fuel up. But let's back the chart out here in the euro. I mean, it's easy to look here. This euro is starting to break out, get a nice little run. Let's take a look, though. I mean, the euro, that RSI in the euro, it is coming in some resistance here. Now, you also have the halfway retracement from that famous 2018 high, 125. We struggled there, and it was a pretty sharp move lower from there for a while into this capitulation of coronavirus pandemic. But now we've moved up higher. The golden cross, 50 above the 200. This tailwind is already playing out. It's playing out right now. So we're running into 50% retracement here. Let's call it 116 area. So that's going to be good resistance to keep an eye on. And this is a continuous euro. So watch that. Now, overall, though, listen, the euro could continue higher. There's nothing to say it can't. Watch the dollar index, 94.70. Big support. We're spawning off of that right now. That's the September low when the fallback in March when a lot of volatility, big range, but it was almost a 10-point range in the dollar index as volatility was picking up across the board in all asset classes. 94.70 was really big. Is really big in the dollar index, so keep an eye on that. But again, we're here to help. Give us a call. We're here to help with anything on the board. 312-278-0500. Remember to sign up and guess the number for tomorrow's Nasdaq opening range. The link will be on this video going out if you get it in an email. So if you have any questions, give us a call, 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks.